First, to stocks that are shaking off as they have been throughout the month. A lot of worries and hitting a lot of green. David Nicholas on all of that. David, great to have you back. You know, when we look at this, David, this market has been noteworthy in the wall of worry. It's been climbing. Now, not as much worry as there was before. It's still a good number, a plurality who are concerned. You know, we could head into some headwinds here. But does that worry you, that consensus is building? All right, green light to go.
Well, I mean, we've got 130 companies reporting this week, Neil, but the market has lived up to the hype. You're right. I mean, starting this year, it looked like the world was ending for the market, that earnings were going to collapse. So what we saw that inflation was coming down, which was positive. We saw that there might be an end to the Federal Reserve's rate hike cycle. The unknown mystery for the markets is where earnings going to be. So stocks traded up with this hope. And guess what? We've seen earnings that have actually come in pretty strong. But here's the interesting point. If you look at the numbers, 80% of companies have beat on earnings per share, which is great, but only 64% of companies are beating on revenue. And this is an important number because, look, if revenues are declining or growing at a slower pace, that's actually very telling because it tells us a lot about the U.S. consumer. We're going to know more about the U.S. consumer when Apple reports this week. It's something we're watching closely. But I want to see revenues increase. I just don't want this multiple expansion to be the only thing driving stock prices. We want to see revenues going up as well, Neil.
Yeah, to your point, revenues are sort of real time. I mean, you can start picking apart whether you're making money off those revenues, but you got to have the sales first, to your point. Let me ask you a little bit about the state of the consumer, because I think that has been the wild card that has confounded certainly a lot of bears going into this year and throughout this year. Still resilient, still buying. How do you describe things?
Yeah. Well, the consumers have money to spend, right? We've talked a lot about the stimulus that has been in consumers' bank accounts over the last 2 years, but now consumers have started to spend that down. But here's what does it for me, Neil. When you have unemployment at 3.5% or lower, Americans have jobs. They may be working more, right, but they may be spending more, but they've got income coming in, and there is some confidence still about the future. So we haven't seen any slowing in consumer spending. But again, what we want to see is Apple is going to be telling. When Tim Cook speaks, not only do U.S. investors listen, the globe listens to what Tim Cook says. Because if we see slowing in Apple, that's going to paint a picture, I think, globally, that we're starting to see some slowing in demand. So we're watching that closely. The street's looking for 6% growth as far as Amazon's retail sales goes. So between Amazon and Apple this week, it's very telling to what this U.S. consumer is going to look like for the back half of the year.
You know, and quietly, we haven't noticed that China's sinking into something. I wouldn't go all out to call it a recession, but a severe slowdown that could have reverberations worldwide. What do you make of it?
That's right. You know, that's a big part of this. Obviously, we have the geopolitical risk with China, but there's also the economic risk with China. And again, it's hard to gauge, Neil. You know, I'm a big advocate of the free market. I know you are as well. But China has been subsidizing their economy. And so I think the real question for investors is China going to continue to go down this path of subsidizing its market? Because that is skewing results out of China. But I think if we get dollar weakness, which is what we're seeing, if the situation economically in China is not as bad as what I think it will be, that does actually provide some more tailwinds to stocks. So if you have a weakening dollar, you have a stronger China as the economy comes back online. It's another reason why the bulls, I think, will be excited about the back half of the year. But I think it is important to see where China ends up. I'm a little bit more bearish when it comes to China's outlook. I think they've got some really systemic issues in their market. China's trying to really figure out what they can do there. But I think that the situation may not be as bad for investors as what I even initially thought it would be coming out of China.
We'll watch closely. So good having you again, David. David Nicholas, following all of that.